first step in doing credit spreads is to do some charting. Charting is important. You're going to chart your support and resistance at a very minimum on the daily chart, and you also want to do the 15-minute time frame. If you're really doing short entries and exits, which I don't suggest, you can do shorter time frames, but the 15-minute time frame will suffice for the daily trades, and the daily chart is going to be good for multi-day trades, or if you're going to swing trade some credit spreads. Alrighty, you want to look here at this is XSP I told you about, and I'm looking here for some support and resistance. I would look first at the day. I'm showing you exactly what the whole day looks like, but the entry times would be earlier in the day. So let's say, for example, we would be back in this area at the beginning of the day where support is. So this is where you can enter. This is where you can make an entry for a put credit spread because price is starting to go up. Then you have a situation up here towards the top where you have an opportunity for a call credit spread because we have reached some resistance. So we're looking at put credit spread around 9:45, 10 o'clock, and a call credit spread around 12:30. Let's go to the platform so we can see the entries for these two trades. Our step one was to do our charting. We determined that around this time, 9:45, is a good time to potentially enter a put credit spread. We're looking at the option chain on the single chart, and we're going to use delta and probability out of the money to help us determine what might be a good strike. Delta of about 13 or 14 is generally a good place to be. If you're a little more aggressive, you may want to go with the 0.21 delta. 0.21 delta basically says you have a 78-79% chance that this trade is going to be out of the money at expiration. This is where you determine what your risk tolerance is. Are you one who's a little more conservative and would rather have an 85%, or you'd rather have 85% chance of profit? Or you're a little more aggressive and you're okay with 79% profit. This is 424 is your sell leg, 423 or 424 is your sell leg. We now change the spread from single to vertical. We looked at 423 to 424. We like those strikes. You would select the bid column. It is going to pay you $17 in premiums. You're doing a one spread, a put credit spread, 423, 424, believing that price will stay above the 424. When you like everything that's there, you select it. Tells you here, max profit $16, max loss is $84, which is 100 minus 16. That the cost of the trade is $16. When you like it, well, $16 is coming to you in profits. You're going to make $16. If you like everything that's there, you push send. You just heard the noise. The ding lets you know that we're in the trade. Once you're in the trade, you can go to the field tab and you can see here under field that the trade has been accepted. You received $14 in premium. Your put credit spread is on and running. Let's move forward and look at a call credit spread. How do we enter a call credit spread? We're back to the single screen where the spread is single. We looked above the resistance level there. Also want to confirm the strike price by using delta and using the probability out of the money. 0.30 delta is about a 70% probability out of the money. That's a little aggressive. You may want to go with more of a 15 delta or less, 13, 14, 15, somewhere in there is more of a moderate or conservative amount of risk. This gives us 433 as our strike price. We change the spread to vertical. Look for 433 on the call side. Select the bid column. It says here we're going to collect $9 in premiums for a one spread, one call credit spread, 433, 434. When we push confirm and send, it shows here that our max profit is going to be $9 and our max loss is going to be $91. The cost of the trade is $9. In parentheses means that's money that's coming to us. That is a premium you're going to receive right as you enter this trade. Now that you've selected your strikes, you selected your expiration, you've gone through the steps to enter the trade, make sure as a seller that you're always looking at the bid column. Sellers, we do bid column. You start with single, look at the strike that confirms or concurs with what you found on your support and resistance area. Pick a delta or probability out of the money that suits your trading aggression. If you're one who's more aggressive, you may want to be at a 0.3 delta or 70% or around 70% probability out of the money. If you're more conservative, you may want to go with 80 or 85% probability out of the money, which is a 0.15 or 0.2 delta. Just know the further away you get from price, the more safe you get, or the higher the probability of being out of the money, the less money you're going to take in premium. So there's the trade-off there. You have to be comfortable with how much do I want in premiums, how much am I willing to risk. There's 3 possible outcomes for this trade. If price is not beyond your sell strike, you're going to keep all of the premiums that you took in at the beginning of the trade. If price is between your strikes, then you're going to pay some portion of the premiums that you received. You're going to pay some portion of that back. You will have a loss, but it won't be max loss. If price ends beyond your strikes, you're going to experience max loss. The broker's just going to keep your money. No shares or anything are going to exchange hands. It all is cash settled. There's also a couple of ways we can close this trade. You can let this trade go through the remainder of the day and let it expire worthless, or you can close it on your own. Once you have a profit target that you're comfortable with, or you're at a stop loss target that's a place where that's as much money as you want to lose, then you can turn off this trade by buying to close. Anytime you want to close one of these trades in Thinkorswim, you can decide I'm good with what it's doing. I'm ready to close off and collect my profits, or I'm ready to close off as a stop loss. Either way, you can select both legs. You click the first one and select the second one. Right click and you're going to create a closing order. Basic says here you're going to buy the vertical back, and you're going to buy it back for $3 or $2 in this case. This whole order turns green, which means you're going to spend money to exit the trade. If you're fine with what's in the price box, you leave it like it is. And when you're done, you can confirm and send. Basically, what you're saying there is, I'm going to buy this trade back for $2. I received $10 or $7 or $9, whatever, I think it was $9. I received $9, and I'm willing to buy it back for $2. That means I'm going to keep the difference, which is the $7. Or your option that you could always leave it and let it expire worthless. The trade price column is the column that tells you how much you received in premiums. And for the put, both of these puts make up the spread. The difference between these two, 39 minus 25 is 14. That means we received $14 for this trade. And the mark tells you what it's currently worth. If you take the difference between these two, it is 0, which means the trade is now worthless and you get to keep the entire $14 you collected at the beginning. For the call credit spread, you take the difference between these two strikes, which is $18. That's what you received when you were entering this trade. And when you're looking at the mark column, this is what it's currently worth, which you take the difference between these two and it's worth 0, which means you keep the entire $18 that you collected from this trade. The P&L percentage, it shows you 100% profit and loss, and the P&L open is $32 because between the two of these trades, you collected $32 in premiums and you leveraged only $100 of collateral in order to make $32. This is why I talk about the power of credit spreads. It's because you can use a small amount of collateral and generate a nice profit. $32 off of $100 of collateral is a 32% return on this investment. And you've done this today. This was a 0 DTE trade. Well, we entered this trade at 10 this morning and again at 12 in the afternoon, and we collected $32 in premiums throughout the day. And at the end of the day, the broker releases your money back to you, and you keep the extra $32. A 32% return on your money on a daily basis is good stuff. A 32% return on your money with 1 day of trading, hey, that's good returns right there. And if you want to be even more conservative, we could have picked one strike away and taken in a little bit less in premiums, but you still would have made 10 to 15% return on your collateral. That's what we're after. If every day you can rinse and repeat and make 10 to 12, 15% return on your money, that continues to add up and that continues to compound. And you use the same collateral over and over and over each day. If you want to make $10 a day, you use one contract. You want to make $20, perhaps you do two contracts. You decide you want to use $500 and you're taking in 10% returns. That's an extra $50 each day in profits. You do $50 each day, that's a $250 week. That's pretty good returns. Okay, so in this video, I've given you a basic overview of credit spreads. I've shown you how to enter, how to exit, how to select strikes, how to make the money, how to look at the money, all the good stuff that goes along with it, right? I hope I've encouraged you to lean in closer to credit spreads because there is a great deal of power in creating profits for credit spreads. I would suggest that you spend some time paper trading. You want to use your simulated account. You don't want to jump out there with your cash money right away unless you're just, maybe you're significantly risk averse and maybe you'd like to do that. But if you want more information or a little more fine-tuning details on credit spreads, I do have a training at my website, educatortotrader.com. I'll put the link in the chat. But I have a credit spreads training as well as trainings on other selling strategies. Hey, if this video was helpful to you or you have any questions, leave me a comment. Put me a comment down there. Let me know that you're watching. Be sure to subscribe and hit the notification bell. And last but not least, I want you to stay green and let's get this money.